Okay, well, the topic of the webinar today, this morning, is where are the big fish trades in the market right now? And let me tell you, they are circling, so it's there. They are there. Now, for those of you that have never attended one of my webinars, feel free to go in at any time and submit your questions via the GoToWebinar side menu. It should be right there. Submit the questions. Now, please keep in mind there are a lot of people in the room. I will try to read them as they come in, but sometimes they come in fast and furious, so I may not be able to catch them. And if I miss them, or if for some reason I don't answer them at the time, please feel free to go ahead and resubmit them at a later time. There's no bother at all. I try to answer all the questions as best I can, but I don't necessarily want to interrupt the flow of the information because it is a little bit of a complicated subject with some intricacies, so we're trying to stay in the flow so it makes the most logical sense. So again, I appreciate that. And again, feel free to go ahead and submit your questions as we go. Here's some little information about me. Again, my name is Dave Aquino. I am a 1995 graduate of Vanderbilt University. I joined Merrill Lynch at the age of 23. My assistant was 33 at the time, and my mentor broker was my father's age. I was the youngest guy in the office, and I didn't know any better. I didn't think that was out of place. So I was with Merrill a number of years, and then my family moved out towards Philadelphia, Pennsylvania, and I joined the Vanguard Group's senior division, and I actually worked in the Asset Management Services Group for 12 years. And me and another gentleman advised multi-million-dollar family clients, and I managed portfolios, individual stock positions with options and other various strategies. And it was a lot of fun working at Vanguard and with my clients. So I had a good handle on basically how wealthy people managed money. And you know, it was very interesting. But now my time with Microquant, I have been running the stocks and options live trading room for 11 months now, and I do other things with Microquant in addition to doing these informational webinars and running the live trading room. So it's been a lot of fun, a quality group of people, and I really enjoy it. Now some personal stuff. Again, I live outside of Philadelphia, Pennsylvania. We've been living here almost 13 years. A great place to raise a family. I have two 12-year-old twins, a boy and a girl, hitting that 7th grade year, so, you know, middle school. I am a master scuba diver. I very much enjoy scuba diving. I was working on my dive master certification when I was in college also, so a little bit of extracurricular. As my children have gotten older, I definitely have spent a lot of time coaching them in their various sports, and again watching sports. So a little, you know, just so you know who you're listening to today. All right. The risk disclaimer for our webinar here is, again, you've normally seen this before, just for you to know that, again, trading or investing carries a high level of risk and is not suitable for all persons. Make sure that you have the background, the experience, and the ability to tolerate risk for any trades that you take. Now, again, this information is subject to change without any notice and is provided for the sole purpose of education and assistance in making your own independent investment decisions. Now, we cannot guarantee the accuracy of all the information contained herein. However, we have done our best to make sure that this information is as accurate as possible. Now, again, most Most importantly, any past performance results are shown for illustration and example only. They are hypothetical and as such have many inherent limitations. Now, no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. And past performance is not necessarily indicative of future results. This is the government-required CFTC Rule 4.41. Want you to know that trading in futures and options trading has large potential rewards, but also carries large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Do not trade with money that you cannot afford to lose. Now, this is neither a solicitation nor an offer to buy or sell securities, futures, stocks, or options on the same. And no representation is being made that any account will or is likely to achieve profits or losses similar to those shown on this website. Again, past performance of any trading system or methodology is not necessarily indicative of future results. If you have any questions on these two disclaimers, feel free to go ahead and contact us at Microquant. All right. This is the whole premise of the webinar today. It is basically that if you give a man a fish, you can feed him for a day. Teaching a man how to fish, you can feed him for a lifetime. And this ancient skill of fishing is a fitting analogy for what we do every day trading in the markets. It gives us the opportunity to provide the means to support ourselves and provide for our families. Now, in most places of the world, if you can harvest from the sea, you can survive and possibly become prosperous. Now, keep in mind, there are some fish that are bigger than others. So it depends, your success as a trader depends on how consistently you can bring in fish, and every once in a while that you can catch a big one. Okay, I'm here to show you these big fish trades. And those are those opportunities in the market that are standout chances to make money. So basically, here's the outline for today's webinar. What do I mean by big fish? How do we build wealth with large, profitable trades? How do you catch the big move right from the start? How do I manage my position with little or no risk? What do I do when I have big profits on the line? When do I take my profits? Then I'll show you an example that I an example of a trade I recently had in Priceline. That particular trade netted $63,000, and that's a trade I actually had also in the live trading room and managed it. And then I'll talk about what do I see, what's in the water now, what is shaping up in the markets that you can take away and take advantage of. All right, let me just double check here, make sure I don't have any more questions. Excellent. Okay, what do I mean by big fish? A big fish trade is a winning trade of sufficient profits that it can make a sizable impact in your trading account. Now, I know some people, they trade, they might have a smaller size trading account, and any trade that they usually take is pretty substantial. But when you have a appropriately sized trading account and taking appropriately sized trades, we're talking about a big fish trade that can change the nature of the trading account to the point that it can actually substantially add to the performance of it long term. When I say a big fish trade, we're talking about a 100% plus return or more. We are looking for a quick return on profits, and we're talking about a swing trading type of time frame that usually lasts 2 to 4 days. What we want to do in order to take advantage of the trade, it's also important to control risk. And these trades are structured to have relatively little risk to our trading capital. Zero risk is optimal. Now, a big fish trade, you get a double, a 100% return or more. We're talking about an impact to your trading account of anywhere from 2 to 5%. And some people will tell me, say, well, Dave, every trade I take is 10-15% of my trading account. That's a little bit too big. What I'm talking about is trades that normally consist of anywhere from 3 to 4% of a trading account. A double in there will increase the account by anywhere from 2 to 5%. Sure thing, Arthur. Try to do this. Okay, sorry. I'd moved away from the microphone a little bit. Thank you for asking. Okay, hopefully that's better. Okay, thank you. Okay, so the first step, building wealth with large, profitable trades. Okay, again, long-term success in trading is built upon a steady increase in your account. I mean steady growth. We're talking about daily and weekly consistent profits with relatively small losses. As a professional trader, you realize losses are basically the cost of doing business. But the hallmark of good trading is minimizing those losses so that they don't eat into those consistent profits that outweigh the overall losses that may come about just because of trading. Okay, the next thing is that our trading is punctuated by a healthy dose of what I consider big fish winners. Okay, it's steady, it's steady, it's steady. Then you have a big winner. Steady growth, and then a big winner. So those big, relatively bigger jumps in trading size serve to increase the compounding nature of the growth of your trading account. And again, most people focus on, did I get a big score? Did I get it? Did I double or triple my trade? Long-term traders realize that the goal is compounding your account. And then after that fact, you also need to know when enough is enough. If you get to your account to be a certain size, then you don't necessarily have to risk as much per trade. Know when your trading account size is enough to generate enough money for you on a steady basis. Okay. Now, this is just an example of the power of compounding. This should be your overall goal. This is a chart that I use in the live trading room all the time because we have a series of trades that we do, and one of them does focus on weekly returns. And you can see that weekly returns, when applied over time, make a tremendous amount of difference. We usually use this 3% level. If you can consistently compound at 3% per week, that's reflected in a roughly 12% monthly return. So if you start out with $10,000, a reasonable return over a year is around $46,000. And then you can bring that out 2 years, $200,000. Now, I'm not going to keep going and go 3, 4, 5 years here because those are kind of pie in the sky type of returns, but it is a realistic expectation. If you can perform at a high consistent level, you can do something that starts out with $10,000 and realistically could earn 20 times the money just over time. Okay, so again, the goal of increasing a goal of trading should be to compound your trading account at a reasonable, consistent level while keeping your losses small. All right, so let's go ahead and get started. Let's start talking about big fish trading and get into the mechanics of it. The rest of this webinar is really going to be straightforward, talking about trades. We've gone through some of the introductory material just so you know where our focus lies. So we'll just go ahead and get started right now. Okay, catching the big move right from the start. What do I mean by that? What are the big moves? Well, big moves are those opportunities that we can take advantage of in individual stocks and ETFs. Now, big moves are conducted in securities that I consider big fish. Now, big fish stocks and big fish stocks and ETFs are basically large value stocks with large average true ranges. Okay, these stocks make strong directional moves, and these stocks also have highly liquid options. Now, this is optional. It's something that you don't have to do if you don't like trading options. But let me tell you, I'm an options trader, and the ability to trade options in this strategy greatly increases the leverage and consistency of being able to get in with minimal risk. Okay? So again, stocks with highly liquid options. And the examples of these big fish type stocks are Priceline, Google, Apple, Netflix. I just pulled those 4 out, but they're very good examples, and there are more. But those are the ones we like, that I like right now. Okay? Let me show you in the form of a diagram here. The big fish, again, Priceline. Its stock price is $1,360. Its 30-day average true range. Its average true range is basically reflecting how much the stock can move in one day. This is a 30-day average. Priceline has been moving an average between the high of the day and the low of the day, roughly $30. Google, its price is over $1,200. Its average true range, over $20 per day from high to low. Apple, $530 its current price. It can move plus or minus, well, I'm not plus or minus, but from high to low, about $11 per day. Netflix is another one. High low, roughly almost $12 per day. Okay, so that is what I mean by big fish. Now, how do I find these big moves? How do I see whether or not they are setting up? Okay, the power of what I use, basically what I call the power of multiple time frames. Okay, I want to use multiple time frames to identify these trading opportunities. I identify them. Okay, here we go. The longer term time frame, and I'm talking daily and weekly charts. I use the daily and weekly longer term time frames to identify potential turns or breakouts in the market. This is basically where these big moves live, okay? In the longer term time frames, daily and weekly. Now, I'm not going to sit here and be hyper specific today regarding what do I mean by a turn, what do I mean a breakout. I mean, all markets are what we call fractal, okay? That you have a breakout, or you can have a move and then it will turn and have a pullback. That's what I mean by turns. Again, you can have those on 5-minute charts, daily charts, weekly charts. It doesn't matter. The moves are very similar. But when I'm trying to identify big moves, I'm talking about these longer term time frames. Okay? And then I use, once I identify those turns and breakouts on the longer term time frame, I switch gears and I start looking at short term time frames. Okay, I'm talking about 15 minutes, 10 minutes, 5 minutes, and shorter term tick charts. Okay, the purpose of me looking at shorter term time frames is I want to identify an entry. Okay, those of you that have been trading a while, and those of you that are starting to or already get trading, the most important part of the trade is the entry. If you get a good entry, you limit your risk and you maximize your gains. So that's why we shift gears into the shorter term time frame and start to look for entry trades. Okay? No, Sandy, that's fine. You want your entry. The question is there a number that is too small or too big for an entry method? Not necessarily, Sandy. Okay, when you're trying to enter, if you use an extremely short-term time frame, like your 133 tick, you could easily get shaken out of it. Okay, that's the only one thing to be a little aware of. If you're using too big of a short-term entry time frame, you may not see as many trades that will help you get in there. Okay, the shorter the time frame, the more trades you're going to see. Okay, the longer the term, relatively like a 15-minute time frame, you may not see a good entry trade. Okay, so maybe you want to split the difference and look at maybe a 5 or 3 minute time frame. Well, John, I'll talk about that also, but you don't have to follow all of them at the same time. In these big move trades, you just try to identify where the move is that you're hunting. What are you fishing for? Most of the time when I do it, I'll tell you my parameters. Longer term time frame, I use a daily with an eye to what's happening in the weekly, okay? But the setup is in the daily for me. Okay? The short term time frame, I will look at a 5 minute, and then I could do 5, 3, or 1 minute time frames. And then every once in a while, I'll also use the short-term tick chart. I really don't use the 15-minute as much. Okay? All right. But I will go into it a little bit more. That was a good question. Thank you. All right. So now we know what we're fishing for. We see a setup on the daily chart. How do I get this big fish on the hook? Okay? Again, power of the entry trade. That is key here. We want to use the short-term time frame to carry out entry trades in the same direction as the longer time frame opportunity. If you are playing a breakout, you want to play it in that direction. If you're looking for a pullback, possibly turn in the longer term time frame, then you want to do the opposite, go in the opposite direction. What you are doing, again, and this is most important, you are using the short-term time frame to do entry trades in the direction of where you see the longer time frame opportunity is. Okay? Entry trades for bullish opportunities on long-term time frames. Okay? If you are bullish and you think the market's going to move higher, what you are looking for are entry trades that are bullish divergences or potentially falling or descending wedges. If you remember those terms, a falling wedge is actually looking for a breakout once it breaks the wedge. If your entry trade is for a bearish opportunity on the long-term time frame, you want to look for bearish divergences. Okay? You want to look for ascending or rising wedges that once they break the wedge, they'll fall. Okay? Bruce, you're saying it looks like you'll be spending an all day staring at your screen. Not necessarily, but it is not necessarily. It all depends on the time frame. I can trade divergences or wedges and stuff like that all day long on a 250 tick time frame, but again, I'll be going into this some more later on. But there are more realistic time frames to look at and times during the day to look for these opportunities. So it is a little bit time involved when you are getting into the trade. Again, you're focusing your time and effort into the most important part of the trade, the entry. Okay? So once you get into your position, how do I manage my position with little risk? Okay? So you're looking for these entry trades. Again, we're using short-term time frames to carry out our entry trades. Again, in the same direction as the longer-term time frame opportunity. Now, once I get my position in place, I'm maintaining it with a small or no risk stop loss. Okay? Basically, that means is, let's just say I am bullish and I get into a bullish divergence. I'm profitable. I have a small profit in my bullish divergence. When I get to a point where I can take some profits off, instead, I just move to a very small or no risk stop loss. I'll move to break even and I'll keep my position on. Okay? What happens if it turns against me and I get stopped out? That's part of it. That's part of it. Okay? What you are trying to do, again, is get into position. Remember, the purpose of this entry trade is to get my foot in the door. It's not to take immediate profits. Okay? So, again, purpose of the entry trades is to get my foot in the door and not make immediate profits. Now, you've got to be patient. You may get stopped out several times, okay? But your job is to be in position for the larger move. Now, sometimes it's a little frustrating, okay? But think about it. If I get into a position, I have a small profit, I move to break even, and I get stopped out at break even. I didn't make any money. I didn't lose any money. I'm still watching the position. If I look on my larger term time frame and it still looks like a trade that is shaping up, I want to step back in, try to get back in, get into a position, okay? That's what will pay off in the longer term. It is a little bit of work, but again, you can't get something for nothing. So you got to be patient. Okay. Now, let's say you get into a position, it's in line with that longer term opportunity on the longer term time frame. What do you do? What do you do? Okay. Now, I go back to if anybody's ever been big fish fishing, like sport fishing, this is all the same mentality. Once you get the big fish on the line, what do? You want to maintain your position with a small or no risk stop loss. Okay? Now, hopefully by this time, once your stock has moved in the direction in which you think that you were expecting it to move, now you have a profit. Now you might actually have a pretty darn good profit. What do? That's what I call the profit cushion. Okay? You still want to maintain your position, but you can use a trailing stop. You can do it by the dollar amount. You can do it by if it's moving in your direction, but every once in a while it has a little tiny pullback, moves against you, and then that's a good place to put a trailing stop. But you want to give it enough space to continue to run. Okay, you just continue to let it run. Yes, Alicia, I definitely will. I will show you guys examples. I know you want to visualize it. I will show you, but I need to get out the information first. So you have the mental framework of like, why is he doing that? Why did he put that there? So let me just keep going, and I will go into it. I will show you example. Okay? So again, once we have that profit cushion in place, we want to give it enough space so we don't lose the fish and let it run. Okay? Again, how do I land this big fish? How do I basically you're letting the opportunity develop. You're letting the big fish run here. Okay? We go back, once we get into a position, we zoom out, and now we look at the longer term time frame, because we want to use the longer term time frame as a guide as to when to begin to take profits. You want to construct your exit plan based on the potential move in the longer term time frames. Do you have value targets? If you have value charts or value bars, then value targets become a potential place to take profits. We might use the 8, the 21, and the 50-day moving averages. Those are also good locations to take some profits, because now you have the fish running in the direction you think it's going to run. There's a chance it's going to stop. It just won't keep going and building profits exponentially. It's going to stop someplace. So start looking at those. Okay. Also, you could look at Fibonacci retracement levels, and then you could look at our basic support and resistance levels as good targets to to take profits also. Okay, it's great to be in a trade and have profits on your side. It gets to the point where it's a relief that now you have profits, and then as the profits get bigger and bigger, it becomes more and more stressful because now you don't want to lose those profits. Okay, so again, that's why we zoom out, take a look at a longer term time frame, and then identify those potential value targets. Now, with that said, it's okay to have planned and staged partial profit targets. If you have 100 shares and you can identify 3 potential profit targets, maybe 1 at value, okay, that could be number 1, and then maybe it'll hit the 8 or the 21 EMA, and that's 2, and then wow, you have this big support level down here at the bottom, that will be 3. So you take, if you have 100 shares, well, you take 33 off, and 34 off right there. Okay, great. You reach this level here, then you can just, that's wonderful. Okay, if not, then if it comes back a little bit, then you take the rest of your profits as they come and bounce back. It's okay. You have money now, so it's not a problem. Don't get greedy. There are more fish in the sea. But this is a way to structure how do you take profits in your big fish trade. Okay? What determines a value target? You could use the yellow, either overvalued or undervalued levels in value charts. Bob, I'm going to answer those questions also. What is another trailing method I could use? Well, it also depends on how the stock is moving. If it goes down, let's say I'm bearish, the stock is going down and it bounces up, and it comes down and it bounces up, and it comes down. Okay, every time it bounces up and then it starts to head back down, then you could move your stop just above this level. Comes down to here, then you can move your stop to this level. You're trailing your stop, okay? Because these are reasonable locations. If this thing starts to turn around and then really starts to retrace, then that stop loss level is significant enough that it represents a change in the longer term trend that you're trading on. So it's okay to get stopped out there. Okay, it can be any sort of chart, Wayne. Yes, this webinar is being recorded. All right, so let me show you an example, real life, of this big fish trade I did in Priceline back in February. Okay. All right. So this is Priceline, and is one of my favorite big fish trade candidate stocks. You can see that Priceline was making a nice move higher. This right here, folks, was the extent of the big fish trade that I took. Okay, and you can see this is not even a major move in Priceline. This is a move higher. This is a pullback, and it basically is a continuation move. Okay, oops, sorry, it's still moving higher. That average true range frenzy, the 30-day average true range, that's just for an example only. If it's a large average true range on a 14-day, it's a large average true range on a 21, it's large on a 30. I usually use an 8, a 21, and a 50. All right, so again, back to the Priceline trade. You can see the Priceline trade that I'm going to talk about is just this 2-day period right here. Okay, but it's only a pullback in a larger term move. And again, this is February 18th right here. And this is February 20th down here. Okay. All right, so basically I was watching Priceline, and it's one of our trading stocks that we have in the live trading room, so we watch it every day. But you cannot deny the strength of this daily up move right here. Okay, it formed a 3-day base back here early February, and then it moved up strongly for 8 days straight. 1, 2, 3, 4, 5, 6, 7, 8. Okay, even pushed to this MQ trend level resistance here. Momentum was very strong to the upside. It kept pushing higher. Now you can see, if you're familiar with value, the different value levels and value charts, these areas significantly overvalued. Now we know that usually a stock does not persist in the significantly overvalued level very often. Okay, it can't live up there forever. It's starting to signal either a potential pullback in the stock, or how it's getting further and further away from the norm. And that's also evident. You see the distance the current price is from the 8 EMA. We're getting really pulled away from it. Okay, so after hitting these significantly overvalued levels and basically counting the days, I'm starting to look for intraday trades, bearish, kind of counter this move for a potential pullback. Okay, so I'm watching it, and it doesn't mean that I'm automatically going to find the position. I'm not, the purpose of getting into this trade is not to identify the top. Okay, I was looking here and I was looking here. Okay, so this are the 2 days I was watching. So on the day of the 18th, February 18th, now this, keep in mind, this is a 1 minute chart. Okay, this is roughly 12:30 in the afternoon. Okay, so prices came up. This is the high of the day. I like to watch stocks after what I believe is a move into the high of the day. Usually it's in the first opening hour. Sometimes it extends into the early part of the lunch period. Okay, hits the high, and then I'm watching momentum. Momentum falls off back to this 8 in the 21 period, and it comes up, and it's making this price pattern. And what I noticed was there's this descending trend line right here. Okay, so what I start to do is play some resistance trades against this, because I want to be short. I'm buying puts here, I'm selling puts here. I'm buying puts here, I'm selling puts here. Okay, but I noticed that there is this support level right here, and the trend line is coming down. Now, usually on a descending wedge like this, we break to the upside. Here, we didn't break to the upside. We tried to once, twice, and then right here is when, I believe it was this bar, I thought it was going to break through. I purchased some price line puts, okay, because momentum was increasing to the downside. And these two trades here, what did I do here? That's a good question. Okay, what happened here? I actually bought puts, sold puts, and then I kept my I traded roughly 10 calls, 10 puts, sold 5 puts. Bought some more puts here, sold 5 more puts here. Okay, when it broke here, I had 10, I had 5, and when it broke here, I bought 10 more. So when this thing finally broke right here, I had 20 calls. 20 puts. Okay, 20 puts in Priceline. Okay, so once we broke and Priceline moves in a great average true range, we went from 310 to roughly 305. I moved to break even at this point because I had some small profits from here, and then when we finally broke, I moved my position to break even. Okay, basically what break even. Okay, yes, they are weekly puts. Yep. Yes, I am, because I want to establish a position. That's all I want to do. Okay, so now I have puts. I have puts in place, and this is a 1 minute chart. I am at break even, and I'm trading a potential fall from here. Okay, so this is the results. Once I'm in, I'm monitoring the position, but I'm not trying to do too much because I have break even. If it turns around and really shoots up, that's fine. I get stopped out. I have a tiny little amount of profit here. Again, the goal is not to make money right here. The goal is to establish a position before it moves, if it moves. So again, here are those three trades. There's the descending wedge. It breaks lower and it runs and it runs and it runs and it runs, and it comes down. It makes this low of the day and it makes this low of the day right at the end of the day. That was a bullish divergence, so I actually sold 10 of the contracts, took profits on 10. Okay, so right there, took profits. The next day we open up strongly when I believe what I saw here was a bearish divergence, or basically a start of a move down. So I actually bought 10 calls back here, the arrow, and then I just let it run. So I have profits from here, okay? I have profits from this move. We bounce back up. I buy 10 more. I actually have more of a cushion because I count the profits here to put a break-even stop way up here, because Priceline does move. But once I get that position, it just runs lower. Runs, 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 runs. So it gets to this point here, I actually take 10 off. I take 10 contracts off. We gap up in the morning. I'm not worried because I have all these profits, plus I have all these profits booked from this move to this move. And then now it jumps up. What's it do? It fails again and it falls lower. Now this is where I finally sell out of the position. Why did I sell out of that position? And I sold 15 of the 20 contracts. Why did I sell there? Because on the daily chart, we hit the 8 EMA. We hit the 8 EMA and we bounce, okay? Basically, this move right here, this was a bearish divergence right here. Okay, it bounced and then I almost kicked myself because, oh, it's going lower. No, it bounces and it goes higher for the rest of the day. But this is where I sold, right here. So from up here, right around 315, all the way down here to 1260, that is a $55 move. Okay? $55 move. So based on how I took profits and everything and the type of options that I bought, because they were expensive. Actually, the reason why, I'll tell you the main reason why I got out here is the fact that we had earnings the next day. Okay, someone asked me about this. Their earnings the next day. So I wasn't going to hold it into the close. I really thought we were going to continue to fall, so I was a little bit agitated that I had to sell. And then this is a $55 move. Someone's asking me what was my average cost. My average cost, I don't have the figures right with me, but the thing about it is these options were expanded because of the earnings that week. Okay, if you guys trade options, you know what I mean. So I had to buy very expensive options in order to make this trade. Okay, even though it's $55, if this was a normal week without earnings, the profitability would have been much more in a percentage term. Okay, but they were expensive because of earnings. Hold on. So again, the trade basically was this, from this high right around here and significantly overvalued down to this low on the 8 EMA. And again, see what happens right here with earnings? It pops up higher. So that's why I got out. Okay. Yes, Scott, I was watching the 8 EMA. Because I was watching Priceline because I'm looking for a location to get out. Because earnings are the next day. Earnings were actually that night, so I didn't want to hold. So I am out of Priceline. And honestly, you see this kind of, I did not really know what the total was for the net profit when I sold here. Okay, again, because we made some small profits here, right here. We made some profits here when I sold some, made some profits here, and I made some profits here. Okay, so there's like 3, 4, 5 different places where I took profits. So when I totaled it all up, I was actually very surprised. It was like $63,000. But again, that is the ability to make money in these big fish trades that really, and that was just a pullback to the 8 EMA. That's not a major move in this stock. Okay, so that's an example of what can be accomplished in a big fish trade. Now, a lot of people are asking me some option specific questions, and I'm more than happy to answer them. Again, these options were relatively expensive. They were very expensive because of the implied volatility expansion because of earnings, but the essence of it still holds. It's a trade in a big fish stock that makes a major pullback move, and because of the size of the stock, it can make a lot of money. Okay, big amount of money. Some of those, again, I don't want to get into the nitty-gritty of the specific options and which delta did I buy, all those kind of things. Honestly, if you take this trade, it doesn't matter if you bought delta 50, 60 or 70, you made money. Okay, but I'd be more than happy to get into those trades, those specifics later on. Okay. Yes, this is an MQ trend index, MQ trend indicator we use in the live trading room. Again, the gist of this trade is the fact that a big fish trade can yield a lot of money in a very short amount of time. Again, over 63,000 in 2 days. Okay, on a pullback. That's not even a big move for this stock. Okay, so I've showed you, I've explained the essence of the big fish trade, what we look for, how we get in, how we manage it, how you can take profits. I've shown you an actual trade that I took, and then next is let's look forward here for you. Okay, what is out there now? What's in the water now that we can take advantage of? And let me just show you a couple of things. Okay, those of you that have been watching the markets, what I see in the NASDAQ 100, I see a potential bearish divergence. Okay, so we've been escalating right here over the past month. We've come up, we made this high. Okay, corresponds to these green histogram bars right here. We have a pullback to the 21-day moving average, and then we come up here, we make new highs. If we compare the momentum profile here versus here, this looks like to me that the NASDAQ is setting up for a fall. Now, again, you're trying to catch it on a turn, so there's a lot of upside momentum still churning up here. But I'm looking at this potentially going lower. Okay? I don't know if it's going to be this week. I don't know if it's going to be next week. But as long as I'm monitoring and watching what momentum does, as well as this particular bar, that's a really nasty looking hanging man bar. See how far down we came down? We stopped on the 8 EMA. This would be much worse if we actually closed below the 8 EMA, but that's not what it did. But I'm still looking bearish. So in the overall market, specifically the NASDAQ, I'm looking for this market to be bearish. So that's the mindset I'm going in when I'm looking for my big fish. Okay, let's look at Priceline. Priceline is one. Again, we had that really good trade. What do I see here? This first high. Look at this histogram profile on momentum. Okay, we come back down, touch the 8 EMA here. I didn't actually trade this one. We bounce up. We make an equally high here. Look at momentum. And is actually red as of yesterday. Okay, hit a moderately overvalued level, and we're starting to go lower. We have a lower low. We closed in a bearish bar. Momentum is red, so Priceline looks like we're going lower. Those of you in the live trading room actually know I have Priceline puts in place right now. I made some money on a little bit of a pullback from this high right there. And then before it closed, I don't like to have positions in over the weekend, but for Priceline, because I had this profit cushion, I went ahead and made sure I have puts going into Monday. Okay? Because I believe Priceline can come down too, just like the NASDAQ. Again, I don't necessarily like trading. I don't like trading in the direction opposite that I see the market. I love trading in the direction I see the bigger term time frame. Okay, so I'm looking for a fall in Priceline. Okay. Yes, James. Google, right here, same thing. There is the most recent high. Look at those histogram profiles. Look at this one. We come up here, we hit moderately overvalued this day and this day. Those of you in the live trading room know we call this a no return. No return divergence. Okay? That's a divergence on the daily chart. So what you could be looking at is Google, opportunities in Google to go short. Okay? Because Google is setting up the fall also. Okay. The questions again coming in about options. I kind of don't have the time to go into all those specifics today because options are a creature all into its own, my favorite subject. But again, what I'm trying to do is explain the opportunity as best I can with the general idea. Okay. I will. You'll see later on. I will have the opportunity to talk about how to utilize options there. Okay, so this is definitely starting to fall here. Okay? All right. All right, so question is what are you guys waiting for? I've shown you the opportunity. I've shown you the way we can trade this, a type of trade setup. I've told you what kind of time frames to look at. I've shown you on a shorter term time frame some of the entry methods that we've used, and then now with the example of Priceline, and now looking at these two various stocks, Priceline and Google going forward. Now you should have the fundamentals of what you need in order to go forward and implement some of this stuff. You have the idea. Yeah, the NASDAQ 100 I did have on as the QQQs because that is the ETF that I normally follow in the trading room. Yes, that is a very big fish right there, and I always keep him up on my personal laptop because it reminds me that there are big fish and there are big predators in the markets that want to eat you. So you have to be careful. Oh, Mary Ellen, don't worry. I'll have this webinar will be recorded. Okay, so I'll have it up on the Value Charts blog, and you'll be able to review it. All right, now let me go into this opportunity, and then I'll answer as questions as best I can because I can see that there are a lot of specifics. Okay. All right, so I am going to be holding what I call my Big Fish Trading Workshop this coming Thursday at 6 p.m. It's only going to be one night, but I think it's very, very timely. See you later, Sam. Okay, because there is a great opportunity showing up now. I've talked about the NASDAQ, I've talked about Priceline, I've talked about Google. Okay, the market is kind of primed for some big moves, but you need to be careful because the big moves may not automatically materialize. They may take a little while. Okay, now again, I've touched on it, but there are certain techniques with options that actually allow us to go big with these trades, but use very little risk. Okay. Again, we're going to talk about how to find and profit from these potential trades that can return 100% of your money in just a couple of days. Now, I've shown you the essence of it, but I will show you more specifically how I drill down into the different time frames, because some people say, well, what's my stop loss going to be? It's going to be pretty big. It's the essence of it is using small trades to get you in position for bigger trades. Okay, again, I'm going to get into a lot of information about options, and because options give you a lot of leverage, but they also give you a lot of flexibility to get into these positions. Okay, I will be giving a step-by-step method for the all-important entry trade. Okay, entry is the most important part of this trade. Okay, because I've told you it may take a couple of times that you're going to get in a trade. You might get stopped out. You might get in a trade and then get stopped out. So it's a little frustrating, but the bonus part of this workshop will be, all right, you get into an entry trade. I want to make a little money while I'm doing it. Okay, while you're setting up those positions, what do you do? Okay, so you're making money while you're waiting. Some people use it to pad their positions, set up bigger positions, things like that. And then again, I will show you specifically the big fish trades, the big fish that I'm looking at today. Okay, I've given you an idea when I've said Google and Priceline. There are some more, but I'm going to give you all the specific levels that I'm going to identify. Okay, what kind of entry trades can you be looking for? And then I will also show you some of the potential profit target levels. Okay, so I've touched base on it, but going forward I will show you all the different levels. Okay, all right. Just to answer really quickly, a lot of people are asking about options. Again, they're asking about wide bid-ask spreads and things like that. The mentality that I use when I'm going into setting up these particular trades, and I'll share with you in the workshop, is necessarily the fact is we do a lot of intraday trading in the live trading room. So we're utilizing those skills that we use to make money every day. We're actually using those skills a little differently to help us get into position. Okay. Another question that's been asked a lot is like, I can't make it on Thursday. I have something else lined up. Okay. So what we will be recording the Thursday webinar. I'm sorry, the Thursday workshop. Okay, it'll be 3 hours or longer depending on the questions, but I will record it. It will be immediately available Friday. And then what I will do is, again, with anybody that takes any of my workshops, I am 100% available to answer specific questions that you as the trader may have. Okay? Purpose of my workshop is to give you something of value. If you can't understand the essence of the workshop and the mechanics of the trade, then I'm not fulfilling my part, and I always fulfill my part. So I think it's an extremely good setup, extremely strong methodology that can really help you take advantage of an opportunity. Okay? And it's not just a one-time thing. Excuse me, one second. These trades can work in almost any environment, can occur in multiple different areas. The essence of the setup is always the same, and I think it's a really good opportunity. All right, Alex, yes, I would. You can trade. Would I trade these same options with a 7-figure account? Yes, you can. Actually, they work very well in big accounts like that, because one, you're trading really big stocks with very liquid options. Two, you're building positions. Okay, you can use these entry trades several times over the course of several days, and that will build your position very quickly. Okay? The question is how much you want to risk, but that's up to you. But the essence of the trade can be expanded very easily with options. I personally have never applied these techniques to futures, but there is no reason why you can't. Okay. All right. Again, this is basically the description of the workshop. It can be found on valuecharts.com/big. So you can go in there and you can read it. I'm not going to read it to you, but again, there is some definite points that you want to make sure you focus on there. A lot of great opportunities. Okay, this is the course content page. Again, it's on valuecharts.com/big. That's the order form. And then again, this is the information. It is March 13th. I don't know. March 13th from 6 until 9 Eastern Time. The price of the workshop is $147. Folks, that is a steal. You take one trade with one option on a big fish trade, you could easily make 10 times that amount. Just one. I don't know how else to say it. That Priceline trade roughly equated to this one, 63,000. I'm not even going to back up to that. It's too far. 63,000. I traded 20 contracts, roughly. That's the average. So that was over $3,100. $3,100 per contract. The workshop cost is $147. I don't know how else to tell you. What's the risk and what's the reward? Just like everybody, I tell everybody in my trading room, what's the risk? What's the reward? Your risk is basically zero, to be honest. If you take the class and you don't like it, send me an email. I'll give you your money back. That's all. I'm not here to take your money. I'm here to share with you opportunities. Okay? $147. One trade will more than easily 10 times the amount of this. Okay? Again, we will be recorded. We will... I am available to answer all your questions. And trust me, people in my taking my workshop before, I had one lady one time, she couldn't get some of the concepts in my workshop. Guess what? I did a personalized webinar with her. She was on the phone with me. We were looking at charts, and just like you are now, and I was drawing on the screen. So don't worry if you can't make it on Thursday. Still sign up for the workshop because I am 100% available to you. I'll make sure you get the trade. Okay? Again, I can't stress how important it is to do it now because the trades are setting up now. Jeff, let me just see here. Again, my name is Dave Aquino. Yep. I am the options, stocks and options live trading room specialist. Yep. Great, Panikin. Thank you. All right, let me just make sure some of the questions coming through. Maria, this recording will be up as soon as I can get it processed today. Hopefully be up tomorrow. Lee, don't worry about it. Just go to valuecharts.com/big. It'll be there for you. The live trading room, Tony, what we call the platinum membership, there's a special on it. It's $97 a month. You have access to both the options and stocks trading room and the futures trading room. Not so much, Raza. I mean, we do have some swing trades, things like that. But yeah, I guess that would, we don't do a stock picking service, but I show you trades, and basically it's up to you if you take them. People in my room take them, and They usually are very happy. B, I think you'll be okay. I think you'll be okay. It depends on how new you are. This technique can also be applied to individual stocks. If you buy stocks, you can still trade these big fish trades. You just have to manage them a little differently, and I can help you with that. Do I have to have value charts in order to do these trades? Not really, Alex. You know, the patterns that I said, bullish and bearish divergences, I utilize them with the some value charts, but you can easily pick out bullish and bearish divergences, MACD. Those are always available on each trading platform. And then the price patterns, like the descending wedge or ascending wedge, those patterns are you can see them on any charts. You just have to be adept at identifying them yourself. The live trading room is available from 9 a.m. until 1 p.m. every trading day. The moving averages that I use, the 8 EMA, Deborah, that's just kind of a standard one that I use, 8, 21, 50. There's really no, I don't optimize. You really can't optimize comparing the 8 and the 10. It's too fine a level. It's more important to try to see the bigger picture. Let me see here. Dan, like I said, I'm going to talk about a couple of the opportunities I see setup-wise. You know, I'm not going to. I'll give you some pretty specific information as to what I'm looking at. I think you'll be well set up to do it. Okay, give me a second, guys. Questions are coming pretty fast here. I want to make sure I can answer them. Thanks, JP. I appreciate that. See, JP is one of my, he's giving me a compliment. He's one of my traders. Hey. You help nice people make money. They're happy. LW, I really don't look at the pinning phenomenon, because sometimes we look at pinning and, you know, where will stocks pin based on their options. That's really out of the realm of what we're talking about here, because we've seen when a stock makes a big move, the pinning part becomes a little bit less relevant when you have a tremendous amount of momentum shifting. Okay, it becomes almost secondary. All right, can you use... Kim, I'm not going to talk about any other specific stocks than what I've shown today. It would really get too much into it. The workshop will be 100% yours, Tony, for future study, whatever you want. I do that to the workshops I take too, because you got to see it a couple of times. Shabir, I don't know with the new platform. Maria, yes. Maria, I can't see your whole name there, so if you're Maria from the trading room, we will. Laura, okay, let me give you guys a couple of links. Somebody's asking about the live trading room. Give me 1 second here. Now, if you're interested in the live trading room, it's not really the purpose of this, but we actually have a 30-day introductory membership to the live trading rooms. Let me just make sure this is the correct one. It should, and I'm going to put it in the chat box, valuecharts.com/go. All right, use that. You should be, oh, why does that not, it's not letting me in. Okay, it's not, let me just double check this. Let me try it with a www. All right, there you go. There is a link in the chat box now. That should be the $7 initial platinum membership. It's a 30-day trial for $7, and after that it's $97 a month going forward. So it's really good. How do you get ready for this webinar? Basically, I would be looking at charts on a couple of different time frames, probably the daily and the weekly. Maybe look at some intraday charts on the 5 and the 10 and the 15. Polish up a little bit on some reversal trades. And again, to just basically look up divergences would be a good one. And then also some of the wedge patterns. Oh, thank you, Bob. I'm glad to hear that. I know there's a lot of people signing up for the workshop. I really think it's going to be great. I really do. I really do. If you know, I think it's going to be great. I didn't even plan it this way because, again, the market is shaping up in a certain way. It's like, wow. I mean, I actually have 10 puts in Priceline right now, and I just kind of interested to see what happens on Monday. Terry, Value Charts is available for NinjaTrader. Fred, if I had only traded one option in Priceline, I would have made, you know, it's a little easier when you have more than one contract because of the flexibility of it, but you would have made money even on that first day. On that first day, if you got in and it broke down, and I'm trying to remember, I think I probably made about $600-700 per contract that first day. Oh, thank you, Robert. Great. Biogen. Thanks, Robert. That might be a good one. I haven't really looked at that one. The minimum account size, it really depends. The thing about it is this. I can't tell you how many contracts you should trade based on your account size. I can't tell you that. But I'll tell you that if you look at what the options cost and compare that to the size of the stock that you're going to hold, okay, don't look at it like, oh my goodness, this option in Priceline is $2,000. But guess what? The value of your stock is 100 times the current. Okay, let me give you an example. Priceline, for you to control 100 shares of Priceline for $2,000, compare that to buying 100 shares of Priceline, and that's $120,000 or $140,000. It's no comparison. No, none at all. Can I identify divergences? Yes, Shabir, you can do that also with TOS. You just need to be able to use your value bars and your MQ momentum indicators. Lee, it's not that bad. You just need to, if you're trying to put stops on the TOS platform, you just need to input it in there as a stop and then adjust the price that you want to put the stop for, and then TOS actually calculates an expected stock price. It's not 100% accurate, but you know what? Because you have so many option Greeks fluttering around at the same time that the computer system's doing as best as it can to estimate what stock price it would be at that particular stop. So I mean, their system's actually pretty good. Lee, I like TOS, Thinkorswim. How do I do the spiders? Now the spiders is a little bit different, Arthur. You can actually trade the spiders, SPY. The only thing you need to be careful of is the number of contracts you have to trade to make it worth your while. Again, spiders can move just like the individual stocks. The average true range probably is not as big. I like to look at the indexes, spiders and the NASDAQ, the QQQs, as guideposts to say, okay, is the overall market going higher or lower or sideways? if it looks like the overall market is going to start to fall. That's the direction I want to look for the big fish to be going. I don't want to be bullish on Netflix if I think the overall market's going to fall. It could happen, but it's more important to trade with the markets. Do I have stops in my Priceline puts? Mary Ellen, I think I do on half, because I also have profits that I've taken. I kind of roll it all up together, because as you can see on that chart in Priceline that I had up earlier, okay, where I made my money the first time, right here, that was a pullback. What happens if Priceline falls back to this level down here? Okay, if it makes a bearish divergence and it really pulls back, this is a 50% retracement from here to here. It's roughly in this $1,200 area. So what we're looking at, this is a $55 move from where we're sitting right now to this $1,200 level. That's a $160 move. That's the potential trade we're talking about here. What's a $160 move? That's $16,000 a contract. Okay? $16,000 a contract. That's the potential move in Priceline. Okay? Trust me, I'll be taking my profits well before we get to that level that only a small amount might be left, but that's fine. That's not peanuts. This is 55. This is 160. The potential move here was almost $6,000 a contract. Yeah, the potential move here is $16,000 a contract. So I'm telling you, I honestly hope, even though I have Priceline right now, I honestly hope it doesn't break until Friday morning, that you guys can see it. Okay? Why don't I trade Priceline with the trend? Well, it depends on what you mean by a trend. A lot of people ask me that. It's like, well, the trend is up. Shouldn't you be long? Not if I see a bearish divergence. Some people consider me a counter trend trader. I actually like to jump into the trend on this daily chart before the trend shifts. And usually that happens at a divergence that will carry it in the other direction. Gary, you're confused about trading in the direction of the long-term trend and changing directions. Well, in a long-term trend like this going up, is usually you have these periodic pullbacks like this. The problem I have sometimes in jumping in the long-term trend is because I'm a value trader also, when they are overvalued, to me that's too expensive. I don't want to go long when it's too expensive. Okay, I wait for opportunities like this. If I'm still believing in the long-term trend, we come back and touch the 8 EMA and we bounce, well, that's a good time to get long. Okay? I don't want to be the guy buying up here. So at this point, when you see this shift higher and this shift higher here, that's a bearish divergence. I want to be ahead of this move. Okay, usually when you're jumping on a trend, the move is already started. I like to begin at the beginning. But again, I will give you the tools in the workshop to get into these type of positions with little or no risk with options. Dan, we don't have text alerts right now in our signal feed. Options Express should be pretty good, Tony. Nothing. Do I take cheaper out of the money options for big fish moves? Theo, I normally don't, because again, my methodology is I'm getting into the position with shorter term trades and just letting them run. And my shorter term trades almost always use in the money puts and calls. Because let's just put it this way, if it's easier to get a position and become almost immediately profitable in shorter term trades, and then when those small profitable trades now have the potential to become really big trades, but if they don't, the break-even stop allows me to stay in the trade longer. Again, I'll show you those. Again, it's a step. I'm going to give you a step-by-step methodology to do the entry-level stuff. Okay? Trust me, as I've been doing this a long time, and I know what a lot of the concerns you guys have as traders are. And the essence of it is, again, show me the important stuff. Show me the important stuff. Okay? I could talk all day long about how to manage the positions once you're in it. But the most important thing is how do I get in? That's it. How do I get in? How do I risk little? And then you could really mess up the exit, but you're still making money. Kevin, I don't know. Specifically, you're talking about specific price line out of the money options. Like I said, I normally don't trade out of the money. I've been toying around with some Delta 50s. That might be good too. How many different option positions on stocks do I have generally simultaneously? Not that many, Arthur. Really, I don't hold a whole basket of trades. Mainly because in the trading room we do a lot of intraday trading, so I'm not in it very long. When we do our weekly credit spreads, I'm usually in anywhere from 3, 4, 5 different stocks. But that trade setup is different. These big fish trades, probably I'd limit them to 1 or 2, because most of the time they're going in the same direction. So the question is if I had 3 fish that I want to take out of the ocean, and I see each one is a better opportunity, I'll get the one with the best opportunity. Maybe the second one, just to kind of go with it. But in essence, big stocks move in the direction of the overall market. So it honestly doesn't matter which one you're trying to catch. Thanks, Mary Ellen. Hopefully you can make the workshop. Everybody in my trading room, I really want you to take this workshop, okay? This one, you guys have seen me do the introduction to options and then some of the weekly stuff. This is a big trade. This is a big type of setup that can make a difference in your trading, okay? It really can. Yes, Alex, I have. And I do. Theo, the question is, is it better to take a bullish divergence off a shorter term time frame? Well, again, it depends on what I'm looking at on the longer term time frame. Okay, the longer term time frame that drives what type of trades that I'm positioning myself with on the shorter term time frame. Okay, when I'm trading intraday during the day and I'm just trying to generate income and profits, I'm trading in both directions. But for the purposes of the big fish trades, I'm trading with the purpose of getting into positions that will set me up for the bigger term move. Oh, sure thing, Gary. The workshop itself is this. It is value charts, value, can't type, valuecharts.com/big. That should be it. Let me just double check here. Check my link. It will take you right to the workshop sign up page. It's 147. It's not 149, 147. I would say these trades, Arthur, once the move has started, can easily last 2, 3, 4 days. I mean, look at Priceline. This big move in Priceline I showed you earlier occurred over, how many days up did we move? 8 days up. So if this is symmetrical and this is a 50% retracement, this can last 4 or 5 days. But the trade that I actually took only lasted 2. But that's okay. Made pretty good money for 2 days. And really, it doesn't matter if you're going down 4, 5, 6. As long as you're making money, you just want it to keep falling. Okay. But realistically, it's more along the lines of swing trading type positioning. Theo, yes, I do. Most of my intraday setups, again, are to get into the position in terms of this particular trade setup. But usually when I'm trading intraday, I'm taking profits within 10, 15 minutes, sometimes a little bit longer. Will I be doing any intraday trades during the workshop, Kevin? The part of the strategy does include intraday trading, but the market is already closed, so. Deep out of the money options do not really move until the big move is over. That is correct, Arthur. That is why I use in the money options. I use almost always delta 70 or better. What is the dotted line above the MQ regression line? This is our MQ trend index. That's what this is. It's similar to a parabolic SAR type indicator. Will I use spreads to get in the trade? Most of the time not, Kevin. We could, but again, the idea is the spreads would naturally limit us how far the move will go. So what we're trying to do is get into a position, get to break even. Once we do those two things, we're okay. Unless we get stopped out, then we start looking again. Okay, I'm stopped out at break even. Let me try to get back in again. Oh, excellent, Shabir. I hope it works out for us. Not so much Amazon, JT. Tesla has the opportunity to be also, but Tesla's a little jumpier. The date of the workshop is Thursday, this coming Thursday. I want to keep it up here, so I know a lot of people want to know. Right here. Thursday, March 13th. I could have lost it for a second.